what this bill basically does is put us in line with the National Streamlined Sales Tax and Use Agreement, which is an agreement by states to have their sales tax laws be similar in their definitions and their processes, which then allows businesses located outside the state, or in the state for that matter, but primarily outside of the state, to more easily comply with our sales tax laws, and then in turn voluntarily remit sales tax that is otherwise not remitted. All of us, if we buy things from out of state through the internet, through the catalogs, but primarily I guess people do that through the internet, there is a sales tax that should be due, a use tax that should be due. It's voluntary. I believe at the end of the year there's a form on income tax form where you're supposed to put in what you owe and remit that with it. That, I believe, rarely happens. I don't know if any of you all have done it. I know I have never done that, even though possibly I'm supposed to. I don't know. But with this, so in turn, because of the remote sales, there's a lot of sales tax revenue that is not captured by the state. And what that does is put our local businesses, those brick and mortar businesses located in our communities who are in the retail business, at a disadvantage of whatever our tax rate is, whether it be from an accumulative tax rate of anywhere from 6 to 10%. Businesses are not required to participate by this legislation, but as you will hear, I believe that businesses do choose to participate and volunteer to participate in the Streamlined Sales Tax Initiative because there's sometimes this question on whether they have nexus in the state and are required to remit, and to reduce that confusion, this would help them out. And in some other states, they have realized revenues, an increase in revenue. You will hear that maybe Missouri loses $400 million in tax revenue because of remote sales. This bill doesn't propose to raise $400 million, because to do that it would have to be a mandate that every business participate. But what we have seen in other states is that there are enough businesses, around 1,200 of them I believe, that do voluntarily participate, that Missouri could potentially realize an increase in revenue from between $15 and $20 million. And I think that's important. I don't consider this a tax increase in any way. I think it's more that there is a voluntary compliance on a tax that already should be being paid.
I was elected to the Iowa House of Representatives back in 1992. Coincidentally, that's the same year that I bought my first laptop that now everybody has on their desks. 1992 was also the year the United States Supreme Court told the state of North Dakota that they could not collect taxes from remote sellers. It's the North Dakota versus Quill decision that has put all states in a situation where we cannot legally collect tax or force remote sellers to collect and remit the tax from sales of goods into our respective states. A number of years ago, through the auspices of NCSL, a number of states started to come together to try to address that Supreme Court decision. The Supreme Court told states in the Quill decision that it is the complexity of our various statutes that create such a burden to remote sellers, and it's an undue burden when they struck down the North Dakota law. States have come together now to the tune of 23 participating states, where we have agreed on uniform definitions, be it on whether or not you have a food item, a clothing item, a personal property item. We have a number of other states that are looking at participating this year. It's up for debate in Georgia right now. In fact, last week the Georgia House of Representatives just passed it on a vote of 160 to 8, so it's over in their Senate for further discussion. Hawaii has introduced legislation this year. Connecticut is looking at it. Massachusetts is looking at it. We're going to cross that threshold of having half the country participate. In my particular state of Iowa, we collect $12.5 million through the voluntary collection and remittance by over 1,200 retailers across the country today. The reality is that number will only go up. particularly as we see more and more transactions occur remotely. It used to be that remote transactions only occurred when people picked up that catalog and then picked up the phone and made that telephone call. Today, people are doing their shopping online. In some cases, they're doing their shopping with companies that also have a brick and mortar presence in our communities, but all too often we're finding that people are choosing to shop online rather than do their shopping with our Main Street merchants. The Main Street merchants that are paying the property taxes and providing the jobs and keeping our local economies running. It's estimated that the state of Missouri loses $430 million on an annual basis. Think of what you could do to either adjust your tax climate to create a healthier economy for your state, or other things you might choose to do with that money simply by collecting a tax that is owed. Missouri is a state that has a sales and a use tax. It's a tax that is owed. And in some states like New Hampshire, Washington, where they don't have a sales tax at all, passing something like this would be problematic. And ultimately, if states join the compact and we agree on uniform definitions, it is still within your state's purview whether or not you choose to tax an item and at what rate you choose to tax that item. That's still an issue of local state sovereignty. We just as states come together and agree on the uniform definitions. It was not a terribly difficult thing to pass in Iowa. When we passed it, we did it in connection with a larger economic development package that earned bipartisan support. I'm a Republican. I was a Republican speaker. I did it in conjunction with a Democratic Senate and a Democratic governor. But it's something that's earned support from both sides of the aisles across the country.